Hello, good morning, and welcome to the Breakfast Club. My name is Darren Hancock, and it's the 20th of November, 2024. Welcome, my friends. And let's have a look at I caught a little run here earlier off this consolidation. I'm looking for this objective we've been looking for all week. I'm looking for this little imbalance up here to fill, and I'm looking for potentially higher run. So we are slowly getting up there. What I want to see is us dig into this imbalance right here, this BISI, and this little volume imbalance where we have just sell side delivery only on a little wick with nothing on the buy side. So that'd be my upside objective for the rest of the day. So we'll see how that goes. Gonna move my stop in here now, just because we've got a high that's been created here. The potential reversal is here, and this downside candle, if we get taken on the downside, that's the potential reversal there. So that's where I'm going to sit. Actually, just below the fair value gap there. I don't think we had a full fill of that, did we? Close. It's good when it doesn't give a complete fill. I like that. So we'll see if we can keep going a little higher on this. And yeah, so that's my upside objective for the day. I'm going to let that sit and percolate, see if we can't get a nice little run up into there. Let's have a look at same thing with ES. As you can see with ES, we're already inside that box already. So I like to see that come back up and fill that at 5995. That's the upside objective, 5995. 595. That's where you're looking for. We'll put the carrot up there for those who are on ES. We'll put you up here. That's your upside objective. And YM. So we finally hit that objective yesterday, which is what we're aiming for. Watch here, objective is hit. So now I'm going to move this one to here. And what we want to see is this get through here and start reaching up into this box here. Somewhere around. So that's the upside goal. UNG. Look at that UNG. How beautiful is that? Drop down to that level. Nice. Then we left. We've departed with a sense of urgency, which I like to see. Now we're up to, this is this week's objective. Not next week's, this week's. So I'm looking for it to get up into here today. I don't want to see it freeze on that close. So I want to see that keep coming up higher. Natural gas on a run. Let's have a look at this on a daily. See if we find another upside objective on a weekly here. Okay, so we've taken that out. So I don't want to see this just turn into a wick now and start coming back down again. So I do like the rejection block up here next. We're already through the mean threshold of that candle, but through the imbalance here. We might use this imbalance to go higher. We use this to get some leverage on there to go higher and reach for these higher highs. I'm looking for, well, that's weekly, not daily. I'm running for mean threshold, or sorry, the rejection block first, and then that old high. We've already taken these highs here, which is good. And I'm looking for support off of here now to go higher. I was just keeping an eye on some couple of trades there. All right, copper. Where are we going with copper? I like to see copper come back to 822, go higher. Crude oil, we'll get to that in a second. TSX is looking good. Gold. I'll get to gold in a second. HNC and Goliath not doing so well. Wheat once again failed to go to our lows. It did, however. There's a little imbalance abyssy right here. I'm looking for why did it stop there. There's a little imbalance abyssy right here. Came down, hit that, and we've had a nice reaction off of that now. Got a reverse, all those. You want to see this high get taken here for us to start running up higher. And the upside objective will be right in there. So we hit that objective, hit this one now. Now we have to see whether or not we get through this to start running for the soybean low, what we're expecting there. I like the fact that we have an imbalance right here, traded below it, back inside it, and now I'd like to see that continue coming lower. Sugar, we've traded through it, and actually dropped down below it again, came back up. Looking for oh, this, whatever this little box was I had drawn before, it's right there, so I'll remove that one. Looking for the downside objective there. Coffee went higher. It's good. We could be getting a small retracement back in here now, inside this range. Look for an old high back here. We bounce off that old high and then go higher. I like to see that stay open and not refill it. Live cattle continuing to climb higher. We're looking for, okay, we've hit that fill. Now, how are we going to act inside this yellow box here? If we drop below this again, look for another run back down into this level here. If we get above that on a close today, look for higher prices and extend and reach for the buy side liquidity. Cocoa, we're finding support off this order block. Old high, start running up higher here, take this breakout, and we're aiming for this upper box again. Buy side liquidity on lumber. And little piggies are still inside the gap. I like this. I want to see this degrade now. Just turn into another blue candle and start coming back down. If we pop through this, then we're looking for a run up into 81.67 to 81 or 82.05. And oil. From 9 o'clock, 9:30 or 7:30 this morning. Break in structure. This would be a better break in structure here. This is just a run back inside the range. As soon as you see this level get taken here on the downside, first indication is fair value gap. Break through it, come back up, trade into it right here to go lower. You want to see that low get taken on the close. It does. Trade back up inside it here. Bodies are respecting the high. And you're back inside that imbalance again, or that busy. Roll over, take out this low, come back up inside that candle now, and this one again. And then we continue to reach for here. So now once this low is taken, then you have a decent break in market structure to the downside. And you do. And notice how, if I draw this candle out here now, see how it holds perfectly on the price, comes back inside it and continues to degrade down. So when you're looking at breaks in market structure, you want to see those areas actually hold price once you trade below them. And preferably you want to see the trades, the bodies of the candle stay in the lower half of that. Like you see how the majority of this is staying in the lower half. We have one small candle getting above, but it still reaches up into a level that we have the reversal happening on. So continuation on the downside. So we're looking for lower prices in oil for now. And looking for a downside objective is 69.76 to 69.83. 3 so far. Gold. We've played off these daily fair value or new day opening gaps, new week opening gaps, overlapping above one another. We're already between here and here right now. I haven't got anything solid on the hourly for gold. We've broken structure to the downside. Going back up, we could come all the way back into a consequent encroachment of this. If we come back and touch this new week opening gap and leave that small portion open, I'd like to see that, or just run up above, which we've done here. I'd like to see it run into the consequent encroachment of that candle and then start running lower. Bitcoin. Bitcoin. What do we got for Bitcoin? We've got a break in structure below here, so I'm looking for Bitcoin to start coming lower. Everybody was hoping this would break 100,000 to 98.9. This big golden place for it to reverse right here, just shy of that 100 grand. Everybody's hoping for that. And I'll slam it right down against them. So we have this break in structure here on the downside as well. We trade back up into that. Wicks, there's your CAM model 1 entry for a short. I'm going to short 1 right there. I'm going to put a stop loss right up here. Just to prove my point. I'd like to see that drop down now from here. We have Swissy is kind of holding up inside that fair value gap. We do have a bit of a reversal going on here. We've come back up inside it, and this could be the reverse to keep going back down inside this range here now. You wouldn't want to see it leave or take out more than the mean threshold of this candle if we do come down. You'd want to see that. I want to see it get above here now. And if we don't, then we're back inside this range. Today will tell us whether or not, we'll see where it closes today. Today is typically a reversal day. It's Thursday. You usually get your Wednesday, Tuesday, Wednesdays make your high of the week. And then the Thursday is usually your reversal day. So if we are getting a reversal here, what's the numbers? Let's have a look at the numbers. 12. Yeah, this you expect to see that going higher today. Nothing but upside. Let's see how that works out. Right inside that box already. We've come right down inside that. We were looking for that yesterday. I want to see if this holds price. I guess this wasn't yesterday. When did we talk about this? This is a daily candle, so if we bottom out there, you want to see it start lifting now. I want to see that start lifting off this candle. Leave this open and not fill it. If we fill it, then I'm flat on this. No decision on that one. Disney's still looking for upside objective, and okay, we have a reversal here, taking out the lows, come back inside, breaking structure on the downside. High taken. Just gonna wait now until we see what the 930 brings us. We're just shy of this imbalance here. And we're just banging off the bottom of that fair value gap here. I'm not convinced we're not going to take another run on this. Keep your powder dry, because as Michael would say, there's a huge potential for a false bear flag here, that we're going to get that giant drop down. I was expecting this in Dow Jones last week, wasn't I? Yeah, right here. I was expecting this. I had this feeling that we were going to have this big drop. Then it literally went right against me. And like all purveyors of the future predictions, I got wronged. It won't be until it drops below here and I'll go, I told you it was going here. Right now it's still giving you that bear or bull flag type of idea. I just want to see what happens when it gets to here. If we start to get this precipitous drop back through here. We shall wait and see. But until then, let's go say hello to everybody. $32 souls on board already. I love it. Just waiting for my chat box to load up. There, must be my outfit. I got 6 likes already. We just got started. That's awesome. So you're in that like a high resistance kind of not going anywhere chart right now. We've just hit this fill of the abyss here. Oh, we got good morning, Hadid, Mr. Pips, and Dow. Craig, Ollie, Oliver Bull, Ollie, GVK, good morning. Craig, would you look at NVIDIA sometime today? I can look at NVIDIA right now. NVIDIA. Let's get rid of silver because that bores me now. NVD, is that what it is? NVIDIA. So imbalance, trade above it, come back. Bodies are respecting the imbalance. Wick does a little dip below, does a little damage. Then run for old highs, look for a reverse, trades below it, comes back above it, then finally trades below, runs back into this range, back to that imbalance again. We have another imbalance here. Body actually opens above it, comes back into it, gives it a little kiss right here, runs to that imbalance there, hits it, come back inside this range, to this imbalance, finally break above here is what you're looking for. Body breaks above it here, and then if it continues to go above these highs, you look for the big bull candle here and that high. So trades above, does it come down to the bull candle, the old high, and continue to the upside. Imbalance, we haven't really taken out a low here, but we're finding support off that imbalance right now, so we're looking higher, look for these old highs. I want to see it's going to close above here right now, and it has. So we've just dipped back down into here. Yeah, I would say that we're still going higher on NVIDIA. I'd expect to see that take out these highs now. And pre-market is already showing that it's going higher. So yeah, I like these old highs. Look for the rejection block first, then the old high. How's that for NVIDIA? Good day, Darren. Good morning, Mags. Ollie, NQ really making a strong run. Yeah, made a nice little push for that imbalance we've been looking for all week. Wasn't expecting Thursday to make that run. I was expecting Wednesday to make the run, but that's okay. If we hit up here today and this turns into a juicy wick, this could be a nice little, this turned into a nice bear candle. Where are we sitting at though? No, we should see this next couple of days continue to go higher. Friday, Saturday, next Monday, Tuesday. I am expecting to see this all get taken again in here, all the way up into here in the next couple of days. Abs, good morning, buddy. Kilo 50% of daily fair value gap, 28.36. What else have we got here? Hans, good morning, Hans. Derek, good morning, buddy. My D, hey, I'll be in and out today. Have a pretty full day. Enjoy, make some money. We are gonna make some cash today, my friend. Kevin, good morning. Fiddlesticks, good morning. Hello and hello. Don't lose silver, LOL. Good morning, all. Silver's jumping. There's a lot of gapping going on in silver. Would you rather me keep silver over Disney? Who's into Disney when we were calling Disney higher last week? We're calling Disney higher off of here last week. I can't remember who. Greg was Disney. I hope you're in. My father-in-law loves Disney. He's been like 30 some odd times. He loves Disney. He's been to all the Disneys except Singapore. So he's looking to get over there before it's on his bucket list before he goes. But yeah, he was looking at Disney back in 80 bucks. He goes, it always goes over $100. It's a great buy. And look at it, it's over 114. So from 18 bucks, 20% increase, 30% increase. Gotta love that. I just want to see it hit our upside objectives. That's all. Anybody else got a little stock or anything you want me to look at specifically? I don't mind having a little quick peek at something for you while we're waiting for the markets to open up. Silvers. Let's put this one as was it SLV? I'd like to see this hold price here. Ignoring this candle, I'd like to see this hold price right there. Start to move higher and get through this imbalance at 28.48 and start reaching higher. And when you consider gold is on an upward trajectory right now, I'd like to see that continue for silver. Good morning, Shepard. Nobody else has got a stock or something they want me to have a look at? Nothing at all, eh? Well, alrighty. We'll just stick with what I got. And you want to see gold get through here on a close now. That'd be nice. Then start using some of this for support. Like a little gap imbalance. I love that. Keep trucking higher. And then your silver looks like it's going to go higher too. I'd like to see that start picking up as well. I like to see the hour close above that level and use that for support. And then look at this candle here. Continue pushing higher. If we do get just the return to this, like we talked about, if we do just get a return to that new week opening gaps, and then it stops right there and starts to reverse and come back down again, we could be looking for lower prices down here. So this could be just a run on liquidity above the market. We'll see how that hour closes. We've got another 50 minutes yet, so a nice big bold push all the way through here, through these new week opening gaps, and find support at them would be awesome. Oil. We're back up inside that block again now. Watch these two here. Trade above them, come back into them. Here. Bodies are respecting that block that we put in here, that breaker. Is it the breaker? Yep. So now you're between that breaker and this one on the downside. And you're in this little consolidation, which doesn't look all that great either, so. I'd love to see this go on a little tear here, back up to this buy side liquidity now. Pre-market was 1540. Holy crap. Okay, well that's great. That means we should have another big nice gap up. We're looking for these upside objectives here and here. Well, 540 will put you through that one. That'd be great if we have a pre-market that's that high. Prices start to shoot up. I love that. That will be delicious. Oh, it'd be delicious. Okay, we've got some lift off here now. I like it. Keep in mind we're looking for 972. First off, you're looking for the high here at 925. To 898. Silver's good. If no, NQ hangs out here. There's a descent opening gap short if it sets up. Just stick with what you've got. That's what I've got my eyes on, Ollie. You're going short. You guys want to go short? Ollie and Dal, you want to go short? There's no short yet, man. There's nothing but upside yet. I'm just going to move my stops here. We move those into profits. Move this one into profits. Boo-yah. Move those up. We're looking for 9, whatever the close on this candle is here at 894. Look for 894 up here. Now we've got a reverse looking situation here. That took me out right there. Got this reverse situation. Trading below, come back inside, looking for a run back inside this range. You can get reset. You guys might actually have called it just a few seconds, a few minutes beforehand. I'm gonna run up to almost the edge of that. It's not done up there. I don't think it's done up there at all. Breaking structure would be down here. If you're looking to go bearish, you want to get below this low here. Let's just return back into that consolidation. Go along there. Stop loss will go down here. Could come up to a CAM Model 3 is what I have 50% marked off here for. Um, mm, Russell, gold started descent, reversal at 5-minute chart. So did gold start hitting down again off that level? No, it's still going. We want to see it get above that level right there at 670, 2670. We had 2670 trade above, come back to 2670 right here, and then go higher. We're through the mean threshold of that candle, and see how we hit the rejection block again? And watch, see what happens here. If we take out that low, see what kind of reaction you get inside here. So you're inside this small range here now. You could get a return back into here, and we want to see if this is taken to the downside here. If we reverse from here to go higher, or if we just freeze on that, trade below it, and then start running for these lows. A decent break-in structure would be down here below these guys. That whole range is right to 670 again on the downside. So we have to see this low get taken if you want to start getting bearish again. Good morning, good night from Shanghai. Hello from Shanghai. How's my friends from Shanghai? We got a new friend. I don't know what I don't even know what that stands for, but if you've got a name you want me to call you, welcome. I'll just call you Shanghai guy. My Shanghai guy is here. What time is it over there in Shanghai? I could ask Siri. What time is it in Shanghai right now? Hey Siri. God, I hate this thing. Hey Siri, what time is it in Shanghai right now? 10:23 in the evening, in the PM. So you're allowed to stay up later. We're just getting started, my friend. Midnight, that's when you start. You can go to bed at midnight. How's that? So keep your eye on that little level right there. Mean threshold. I like it. You want to see it climb up above here and not just start this little smart money reversal, low risk sell, and then start getting below this level here and then start. Ooh, bing. Look at that. Lock in some profits now. You see how it just went from premium level to discount level, and then right off that discount level, that's where I decided to buy right here for long. We're going to give that a retap into here again. And for me, if it breaks this low here, that's the fail safe. We've got a reverse. Did we take that high? Not quite take that high. I did want to see it get back through here again. So we've got another run back inside this range. Oof, look at that. Came right back and took me out. How's that for good morning? Knifed through, took me there. Did not take my other stop loss on my other accounts though. They were a little lower. I'm going to buy that again. I still think that's going higher. Stop loss down at half that wick. Did that take out my other stop over here? No, it did not. He may have a US name. I found that to be, when working with agents in different Asian countries, they all have US names. Well, he's now Shanghai guy. That's why Shanghai guy. Awesome. Dell smack. 919. Initial fair value gap, holding it. I'm going to move into profits here just in case they decide to turn on me again. Stand by. Send it. Let's go. Send it higher. Are we going to see a push at only to fall back down quickly? Yeah, I don't like all this chop going on here now, but get ready for a little push up in here to 939. 939. Or is that going to take me? Ooh, see how this just keeps switching up on us, eh? I think I am going to move to the sidelines and wait for this chop to end. Oops. I accidentally closed the window that had my chart on it. I gotta go back in. Help. It's probably closed me out now. I tried to click on the chart and close the whole window. Yeah. That's okay. We made a little bit on that. We took a hit on that, so all right. I didn't like all this chop. It's not clean enough, so you bail. Now I'm gonna wait for something. We're sitting a level now that we want to see a reversal start to happen. So either inside this imbalance, the first low is whatever that is on its close, so 94, and we're just shy of 94, so we're just shy of this. I still think we're going to take another run on it, and then there's that imbalance here and here, so there's some draw for on upside liquidity for me right now. I'm still not convinced that we're going lower. Cam model entry for a long, cam model entry for a long, but I want to see it get above here now. I'm not going to touch it till it gets above here, and then if I see a nice bold candle, come back and tap that, then I'll get that for a long. At 50% of that leg, let's see where that ends. No, you guys, maybe we'll have to look for this here now. If we take this out on a close, we've already got structure break here. Well, you guys may be right. You might have something here. Don't marry the idea. If I want that, I don't get it. I may get it after lunch. They're definitely going there this week. There's the 930. So we've run on all this liquidity. We've come all the way back to this discount array down in here. Again, I want to see it get above there before you start getting all fresh with it again. That's the 15-second 930 gap. What's the 1 minute? 1 minute hasn't happened yet. Seconds. Off here. I'm going to go for a buy again on that. It's a little late, but I'm going to stop down in here, below here. To be down here. Let me get a revisit of this. See it revisit that. Now you want to see it leave from there. I'm going to put that there. I can fill all the way. Shit. It's going to fill all the way to here. Turn around and go back up. Play right off that first fact. Right there. No. This is a good thing it did take me there. Traded below here now. Let's wait till 10 o'clock now. I want to see that hold that high. So typically you want to, if this, when I took that trade there, you want to say, if it trades below that level, then I'm on the wrong side of that. But I just kept doing the wrong thing and dragging that down, dragging it down, right? We've traded below the low now. And now we've got a run coming lower. Wait till 10. Super dive. Morning, Edgar. What if we get a run down back and retouch this daily fair value gap inversion here? come back and retouch that. Just gonna move my stop into some profit here. I got back short off of here. I just took care of that loss I took there. Recoup that. Downside objective is going to be 529 now. $529 or $540? $529. What's the close on that candle? $534. Just gonna move my stop, chasing it well here. You guys called that a little early, but you called it. Good for you guys. Regular trading hours are filled. Moving into profits big time here now. I don't want to. I don't give back anything. That just took me out. I recouped any loss I would have taken up here. And now I'm looking for this candle to get taken on the upside. If we come back into the 50% of this wick, traded above here. We've taken out all these lows here. Returned back to this consolidation. We'll be running for this 529. Just came back to this order block. Its mean threshold, it held price, and now we're coming back down. See if it takes us low. We've got to close below the here. So we've closed below that low now, or below this. We've got to reverse here again. We take out that low, return into it. We want to see if that now takes us lower. Again, downside is 520, 535 to 481. To go long, you want to break this high here. Watch this one here. Are you to push a high, Darren? What would you say about 8:30 a.m.? Is it significant? 8:30 a.m. I want to see it trade above here. 8:30 a.m. Like 8:30 a.m. New York time, you mean? I wouldn't say 8:30 a.m. significant in that's the news release. when they released the news embargo, and the 9:30 is the open. So 8:30 can be, usually you have, like Michael says, you look for the run above and below, wherever the relative equal highs are and the relative equal lows are between 6 and 7 and 7 and 8. Look for those to go opposite directions. At 8:30 itself, I don't have a huge significance. I don't put a huge significance on it. So I don't know if Derek or Abs or the guys have any major, like 6 o'clock, the 6 o'clock candle, yeah, and the 9:30 and the 10. Not so much 8:30 for me. Big ranges, got my fill, lame no entry 50%, regular trading hour almost filled, 100% of close of open gap, $809 with 5 micros locked out for the day. Good for you, Ollie. Asian loan now taken. I'm just going to do this reversal here, and I'm going to just move it into break even right now. I'm moving all my trades into break even. Again, I'm still looking for this run up here if I can get it. Just looking for any opportunity to see a reversal. So I'm just locking in profits here now. Keep looking for that upside objective. Anybody else is making any comments? So I want to see where my fail-safe's going to go now. So technically it should be below here, but that's got a lot of profits to give up. So I'm just going to let that sit. I don't want to see it get back into here. If that small range, you want to see 50% of that range. From there to there. Back to that candle's open. This is good. Keep pushing higher. News at 10 a.m. Yeah, that could rip it against us. So you want to make sure your assets are all protected here. I'm going to wait for the news now. It just takes care of that loss I took here. And if you look at the range that you're in here, back inside here, just over 50%. And now you've got this reverse that's happened right here below that low. Pop back up into it right here, the continuation on the downside. So that's what my fail safe is. So I put it here. If it trades below it, takes me out, then the risk of this coming deeper into this range is apparent. That's what your fail safe is for. So if we get some news release, we'll wait till 10:15, 10:12, somewhere around there for a silver bullet entry. So you see how we've got a reverse here. We've traded below it, came back into it here, traded below this low, came back into that low, looking for a run below this low now. We'll see if we take out that low. We come deeper into this range. Low. I want to see if we can just get down into that level here. Now, if you want to see if it takes out this high here, if it does, then we've got a little change in direction again. We've taken out some lows. Came back to the rejection block. So we got a little SIBI here. Let's go like this box down here. We'll see if we can get down into this level here. First one there. I want to see it get back into the deeper range here though. There we go. Now see if we work on the other side of that. Good. Now I'd like to see that go lower. So now we've gone below. We feel this, come back inside this BISI inversion now. I want to see if we get some support off of here. Won't start getting bullish for this again until we get above here. This could still run these lows out here. And we're looking for down here. So here's my objectives for the day. We could see this here. And then I still want to see that take a run up there either after lunch. I don't care how it happens. 10 o'clock. Take out this 9:30 low. Would be really nice. What have we got in here for 5 minutes? Let's see if we got a, what else we got here at 4 o'clock in the morning. That would be London's low. Asian's low. Stop. Let's see if it takes that out and then reverses, or just takes this low out here. I don't see anything in here that would support price. Well, wait, it's 10 o'clock now. Look for a run just to take out this low here and see if we can see a nice reversal model happening. What's the silver bullet you speak of? Well, you need to get familiar with your ICT silver bullet technique. Silver bullet is something that happens after, it's the first fair value gap that occurs after 10 o'clock. And the retracement back into it. With the bias in mind, you can look for a run, a continuation. So go to ICT index.io. That is your be-all end-all bot or AI for anything ICT, and type in silver bullet and you'll get all the references you need for silver bullet. You're looking for a weekly low? Well, you wouldn't be wrong. If you take out this low and this low, I can't marry the idea of going higher all the time we're going lower. So unless we get a reversal here, we get a move back. See how we've traded below this level here? And this candle right here turns right back into it, and you continue going lower. So you certainly have a, and you want to be above here. There's a return. You want to see the continuation on the downside now. So far, we have no break in structure. We have no reversal that's being met. We only just came back to the consequent encroachment of that SIBI and then continue going lower. I do like this for a potential buy right now. I'm going to try a buy right there. If it closes, why have I got 5 on there? Closes below here. We're back inside here. We've run above here. It's not really a big break in structure. I'd rather see this taking that high. So this is more of a slight gamble here that this reversal, now that we're taking out that candle's high, come back inside. If it just taps below that mean threshold line in the sand, I'm out. That's probably going to turn on me right now. Son of a bitch. Just watch this level here. That's mean threshold. I just played chicken and I lost. So if it turns on me and keeps coming down, that's the level I'm looking at right there. So if that goes back up again, they play chicken with me and won. If it keeps coming lower, well, there you go. Now you want to see a body get below this level and then use this and this for support. Let me open this up and you can see it clearer. 6 seconds, 5. Nope. Okay, so we closed below it, came back up. Watch that level right there. Okay, we're just like a fraction short of it, but that's the idea. See how we trade body goes below, we came back up just shy of touching that level there, and we're going lower. So that was the giveaway right there, and we wanted that to just give us a little kiss there to go shorter. It extends the range lower. I think it just came all the way back up there, then touched it, and now we're going lower. Reaching for yesterday's low, and that 535, my first objective. So this guy here, I'll put it 535 there. We'll put the caret down here. Got to break this to the upside for me to go higher. There's imbalances in here. So if you're looking at 10 o'clock right here, there's 10 o'clock. Wait for your first fair value gap right here. You trade back up into it right here. Bodies respect that. And that's your short silver bullet. You go for 10 handles or more. That's the first silver bullet. If you take these little imbalances you see here, I want to see this level right here get taken on the downside. You watch this level here. If we take this on the downside, watch this line here. See how important that line becomes. So we have a break here. We're looking for this up here now. Good. So now I want to see this, find some support off of here. Look for this support off of this one now. And you want to see that go higher. And you're looking inside this big range here now. And support here. Start pushing higher. Come on. I've got my stop loss pulled up tight in behind here now. I don't want to see this low get taken. So we're looking for 4, which would be 3. And then I should actually add another one to this because that's not actually 4, it's 3. Let's add a 5th one here. And we'll call that navy blue, I guess. This order block. Let's see if we get a reaction off of that. That's 2.5. Get rid of this. No, I want to see this climb above here and use this for leverage to go higher. I don't want to see this low get taken here. Okay, so now we've got market structure break. If we get a close below here, and you're looking back inside this range here, and look at this, we have to break through here one more time. So we wait for a body to get below here. There's a lot of bouncing around in here today. You want to see this get taken to the upside now and take this fair value gap out. So far we have not had a body trade below here yet. Set some wicks, come back and retouch this inversion. How many people look at this as a head and shoulders? Right now I'm looking up here. If we can keep this candle taken on the close. Looking for that high. I gotta love consolidations. You don't want to see it get below that candle's low right here. Otherwise, we're going to come back and revisit these some more. There you go. That's a nice displacement. Now if we can get back into this low, anywhere inside this box, didn't quite touch it. Get back inside that box, or even touch the lows here for continuation on the downside. That's the first touch. Institutional order flow, entry drill. Back to consolidation. deep inside this range. You're looking at more than 70%. That's institutional or right there. Optimum trade entry, 70%, 75, 78. Look for a fill of the fair value gap here, right there. If we eat through, remember this little line we pointed out here? Watch that line again. So carrots, no good there. So watch and see how it acts off that candle or that dotted line there. I didn't know the shampoo. Yeah. Let's review some of the other stuff we looked at. Did we ever get up to our carrot? No, we did not. All we got to was that little imbalance right there. That's it. Too many PD arrays. See, that's an example of reaching for too many arrays above my, even that one's too high. Well, I don't know what I was looking at here then. This one is below that. This one's way below there. And then the imbalance is right there. And then this candle's here. So you got 1, 2, 3, 4, consequent encroachment, 5. And look how many PD arrays I reached for. And we only hit the bottom one. 1, 2. So we only have 2 of them that were hit. And I aimed for 5. That's what happens when you overshoot your arrays, man. You wind up short. I think I made this, I emphasized this last night in the Telegram thing. Like, be careful about how many arrays you're reaching for. One at a time. If you start to reach for too many above you, and that's you marry that idea, it trades against you. So we took out this high right here, reverse, body trades below it, you come back up inside it here, and then boom. That's where your reversal is. You don't get the reversal here. Body trades above it here. You don't get a chance to get in on it there before it runs back into 50% of that range or more. So you pull your fib tool from high to low. If you did manage to get in on that trade there, you only want to trade at 50%, because if you're on the wrong side of this and it trades back against you, you want to take half your trade off, move to break even, and then if it trades back against you, then you got a little chunk out. You get back in sync with the market the moment it trades below here, and all you're aiming for is below that low. So it trades below it right there, trades back up, gives you an opportunity to get short, and then take the low. You wait for, is there a reversal that happens in here? You have a small fair value gap forming on this side, comes back in, just taps it on the 11 candle, 9, 10, 11, then 12 takes off, all the way back up into the premium array, reverse, body trades. No, it doesn't take a wick trade below it, came back up inside this candle here, went short. So you want to see this fair value get taken on the downside. It does. Now you're low taken, so we're going lower on that, looking for a run through 50% of this wick and then get into this one here below you. Nothing in there. Didn't get what we're looking for in that one either. Ooh, looky look. So we're above there already. So anybody who's in natural gas, we got in at 1256 down here. I think it was 1256 I got in on that. Yeah, I think it was at 1256. 56 right in here. So we're lucking out on that one. We're up at 15 bucks, so that's already almost 20% return in a week. That's good. Now I want to see if it gives some support at that level right there. See if we can keep it going out of here, and then you want to see it climb up into this gap here, and then eventually this little pool above us for natural gas. Who was calling for the low of the week? Sanjura. I'm looking for the weekly lows, not gonna lie. That's good for you, buddy. You calling it. It's looking like you're gonna get your objective, my friend. Good for you. Where else are we looking for it? So looking for natural gas to take out the highs here. Buy side liquidity is in striking distance there. I got nothing else on this lot. Let's look at wheat. We're looking for it to climb above here so we can reach for our upside objective now. We're still looking for the sugar to reach our downside objective. Coffee found support off that level we're looking for. Good. Now I want to see that run higher now. That's great. That's exactly what we're looking for off that high. Looking for buy side. This is the area we wanted to see it break through, and it's so far it's not breaking through that level right now. It's just ran back up and filled that fair value gap above you, and now we're pulling back into this little range here. So you don't want to see the consequent encroachment of this candle's consequent encroachment. This busy here, you want to see that hold price if you want to go higher. You don't want to see that trade below 50%. And if it does, you don't want to see the whole close. So maximum 75% of that. It loses its luster the moment you get below 25, 50, then you get to 75. And if it just comes back and fills it, it loses more of its luster for me to, it's got to really start to get back up there. It's going to, if it does fill that, it's going to snap off of it like a big wick. If not, then we're going to run back down inside this range where this gap is below us. Cocoa looking for upside objective still, getting through that breaker. Use the breaker for leverage to go higher. And lumber looking for that lumber buy side liquidity as mentioned earlier. Lean piggies, we're still in the middle there, so we're stuck doing nothing on that one. Important or not? Precision or not? Return back to imbalance. Also that fair value gap we mentioned, or breaker I should say, that we mentioned over here. Breaker. How many times do we play off this breaker? Ding, all the way into it here, bodies into it here, ran above it, then ran right through it, gapped below it, tapped it, and then went lower. Tapped it again, and now we're going lower. So we've got a reversal going on here. If we get a break above this structure, look for this, again, this area to be supportive to go higher, or tap it It'll be just above it. It'll be somewhere in here at 70.24 and come back down lower. So you're pretty much inside this bigger range here right now with an upside objective just above this box. If you get above here. If not, you're looking for right there. See that one right there? Tapped it. Now if this starts coming back lower, it's got to get through here to go shorter, to extend the range. If it starts to eat through that candle on the close, then you're looking for that candle's mean threshold, and then the rejection block, highs, close above the high, and then you're starting to get back into a bullish run again in oil. Nobody's talking in there, hey? Okay. So what we just pointed at in oil, this is the kind of thing you want to see. You want to see the body trade above here, come back, find some support at this, and start running for higher highs here. So there's your body trading above it. Come back, give it a kiss. All the way down into that candle's wick. There's the kiss. You want to see a portion of this stay open. %50 of the wick would be awesome right there, and stop right there and start going higher. "15-minute reversal on NQ, you say?" "15-minute, yeah. See how this was the reversal right here? And then you trade it right back up into that order block for a short to take out these lows. That's your short right there on the 15-minute. That's your reversal. So who was calling that one? Oh, 15 reversal on NQ, 15-second. Well, the 15-minute is right there. Right there. See how it returned back into it and went short? That's the same principle. So what we're showing you on a 15-second chart is the same thing you're going to see on a 15-minute chart, 5-minute, doesn't matter what level you're on. So there's your reverse back into here, take out your lows. I'll come back, find some support at this at 25.97 and then continue going lower. So a 15-second chart, you're looking for a reversal, Hadi. Yeah, be careful about these. You're probably looking at this as the reversal, and if we can trade back into that, a consolidation. Look for, when you have a big wick like this, look for 50% of that wick. You don't want to see 50% of the wick get taken, so watch. See how it comes right back to the just under the 50% and then starts to go higher. And then be careful of looking at your higher time frames. That could be your high. Now, remember we mentioned this was that little line. See how we traded through the line, back to the line, went away, to the line, went away. I told you it would play an important role later on, even though it's a little tiny imbalance that you don't recognize, unless you're really looking for it. It played an important role. As soon as you get below it, come back to it, find support, push lower. Find support, push lower. No bodies, just wicks. And if you look at the bodies they line up with, mean threshold of this candle right here with precision. That has nothing to do with volumes. That have nothing to do with orders. That's zero to do with any of that shit. It's purely algorithmic. Mathematical return, body, wick takes out the liquidity that's running there and goes lower. That's a beautiful little mathematical equation. Now I'd like to see this, if we do stay inside this range here right now, I'd like to see that return back up into half this wick, 557. Anywhere inside that order block there, which is a breaker. Swing high, swing low, higher high, taking out this high. Last down close candle takes out that high as well. That's a breaker. Now we're below this one here. You want to see this one hold, roll over, and come back down. It is amazing for small wins. Yes, indeed. Like if you're pulling your fib tool on that right there, and you took that initial run hitty into there. It's a great little technique, I tell you. So if you would have got in here, you're below a discount, which is great. As soon as you hit 50%, move to break even, take half off, runs all the way up to 16% right there, or 62%. Move your stop loss to 50 now. Everything's in profit. Take a portion off here, it comes back, takes you out, and then all of a sudden it rips all the way down to here where you originally started, or actually below where you originally entered. So you, even if you're on the wrong side, that fib tool works a treat. You got to be disciplined enough to set it up, to pull your fib, and then be disciplined enough to trade it, and not let that greed go. I'm hunting for the carrot. I want higher. I want 10 PD rays outside of what it was going to give you. And as soon as you see that setting up there, and it closes below there, you go, I'm on the wrong side of that. It's going lower. We've just created a little swing high. There's the reversal. If we take this candle out on the downside, I'm on the wrong side of this. It's already giving you the indication you're on the wrong side of it right there. As soon as it takes that out, you go, yeah, I'm definitely on the wrong side. We're coming back inside this range. Pull your fib tool from high to low. It would have been nice if this one would have come back into that level. You could have taken a short from there and pull your fib tool inside this range and under 50, 62%. And then move to the sidelines and wait for a new setup. Because right now you're consolidating. Exactly, I did that. Excellent. That's the discipline, Hadi. That's where you'll slowly nickel and dime your way up to success. Good for you. Go back into the original consolidation here. Pull from high to low. Those of you who are cam model traders, if you're a cam model person, look at this. And go template, equilibrium, right to that candle's high. Cam 2 model, and then higher. Right on a 38 candle. There's 40, 42, 42. Now you want to see 45 get above that. You want to see a breakout above this cluster here now. I opened your eyes. Well, that's good to see, my friend, because once you see it, you can't unsee it, right? Now you've got your setup. You've got something you can say, I'm sticking with this every time. I can see it on a 15-second chart, and you could literally play that out on every time frame. Every time frame, my friend. Now watch that close above. There you go. Give it a little kiss. And I'm going to go long on that one. Stop loss will sit right below here again. I might be catching myself in a crappy consolidation here, but I like to see that start going higher off of here now. And I'm just in that cluster. I want to see no more than 50% of it. So my fail safe is going to be inside here. I want to see that stay open. I want to see this cluster's 50% hold price and go higher. All we did was come back right now and touch the high or the close or open of this one here if you want. Now that's what I want to see, and then I want to see an acceleration from here. Keeping in mind there's this little guy right here. I want to see it come back through here. See how it hit that level? Right on the money. Come back, find support at that again. I want to see it start to eat through this level now. Lovely, lovely. So now you want to see if this gives some level of support. Move our carrot up a little higher. We want to see it get through this level here now. There's a return to this level. Now you want to see that climb higher. You're welcome, Hadi. Have a great day, man. All right, let's get going. It's the 1050 macro beginning now. Looking for 54. Drilling into this candle here. I don't want to see the mean threshold of that candle give way, but it is. So back to this mean threshold again. Get some legs out of there now. There's 54. And I want to see it get through here. Have a good day, Darren. I'm up and I'm shutting down and I'm out for the weekend. Good day. Thank you. You're welcome, Joe Mac. All the best, man. Take care. If you're up on the day, move to the sidelines. Enjoy your win. It's been a hard fought profit today. I'm even getting sweaty palms. I've moved into profit and that's it. I've been kind of beat up here a couple of times this morning. So I'm just moving into profit here, looking for right in there, inside that carrot again. Like to see that find some support there. That's great. Dig into our carrot. If we can get through the carrot, that's even better still. Lovely, lovely. Right through, eat through that little thing. Munch away, and then I want to see this run up here. I don't want to see it freeze on that. That's the problem right there. Get above it. Aim for the carrot. It's fresh carrot, man. Enjoy yourself. It's a yummy little carrot. Yummy carrot. Eat, eat, eat. Lovely. Moving into more profits. Lovely. Now you want to see that. That's lovely. You want to see it come back into no more than there. Leave that piece open. Let's move our carrot to the next objective. See, one objective at a time is all you want to reach for here. So we're looking for, there's rejection block. Pay yourself there. You don't want to lose the mean threshold of this candle. I'd like to see a portion of that stay open. 50% right there would be beautiful, and start going higher. If it loses its luster, we've got that just return back up into rejection block, and then some measure of retracement in here before going higher. I'd like to see it eat through the carrot. Come on, eat through that carrot. Don't just nibble at the carrot, eat the carrot. There's the consequent encroachment of that SIBI or BISI. Lovely, right on a 58 candle. Eat that carrot. Go and eat that carrot. Now I like this candle. Get a body above that candle. Right there. Come back, munch on that carrot. Let's tempt him to go a little higher. Let's aim for this upside rejection block now. Hi, Darren. In case you're wondering, I wait around to hear you say goodbye. I enjoy your company. Thanks for all the good work. Oh, thanks, Joe Mac. I appreciate it, buddy. I hope you have a lovely weekend. I'm glad you made some money this week. Nothing makes me happier than to know that you guys are finding some value in this. And that's my whole purpose in life, is to help people out. It replaces that paramedic thing for me. So I'm glad, Joe Mac, that you've been able to get some money in your pocket, help out your family, help out yourself if you've got a family. Take a little pressure off your otherwise potentially stressful world that we're in right now. Thank you, Mr. Carrot. There we go. I'll lock in some more profits. Now that high is taken. Ooh, it's running for Carrot. Let's look for a little higher run here. Ooh, we got ourselves a Carrot run. It's carrot soup, my friends. It's a feast. Now we're locking in some profits. This will be it for me for the day. I'm going to wait for this trade to reverse on me. And if it reverses, so my fail safe, ask yourself right now, where's your fail safe? And where's your stop loss? If you don't understand the difference between a fail safe and a stop loss, look at my video on fail safes. And you'll know that's with the place. A fail safe is a place where you expect price to break, or price action to change direction, and then your stop loss tends to sit below a recent low. So if you're I got in down here, where's that? 631 right here. I got in long there, so where I'm trailing my stop loss up, but I'm trailing it behind a place where I expect to see, if price breaks this point, it's going to reverse direction on me. So I have to make sure that I'm looking for this candle right here. If I trade below 50% of that, which is the close of this, it can come back and close that in. I just want to see it tap right there and leave a portion of it open. Like a little tiny piece open. Don't fill it. And then leave. Like that. New candle, new direction. Don't give me the low. Okay. So that's it, 50%. I don't want to go any lower than that, otherwise I'll close out my trade. Here's your stop loss right here. The true fail safe is we can come all the way back into here, right to the top of this candle, and go higher. I don't want to see more than 50% of that candle get taken on the close with a body, which is, I don't want to see a body get below here. There's a small little imbalance right here, and we have the 705 is the potential touch. So my stop loss is sitting right here. If we trade below this, then that's the reversal now that we've taken out that high. And now you can start getting short. And we have to close below this on a bull candle or a bear candle below that level with a body. If not, it's a bear trap. Let's just return here. So now see how we traded below that level right there? That's the first indication that we're going to go shorter. So the bear trap is, this is just a change in direction. So all we're doing is just running inside this range, and you've already hit the maximum level. So you want to be able to say, it needs to come up to here for me to go short and take out that. So if you're wrong and it trades above on a close and comes back and taps it, it gives you an opportunity to get out of your short and go long at only at worst the cost of your trade. And then you have to think, okay, there's a little swing here. We've come down, we've tapped that open, and now we're getting a small little break in, or a small little fair value gap here. Order block, trade above it, come back, tap it, and now we're inside here. So now you decide, are we going to go short or long now, or are we going to go short? Is this the market structure break? Now we're moving into a market maker sell model, where you're going into smart money reversal, low risk sell, and then we'll see if we break this level right here. If we break that, even this one right now, just inside this little range, because there's a small one here, we've just taken that level. So if we break below here on a body, and then that one, we're looking for a run into a deeper range in here. You want to see this hold. We just come back into that little fair value gap right there. And then you want to see that start eating through here. Watch that body right there. See that starting to, oh, see how the wick just come up and touch it? Now you're thinking you want to find support inside this candle here now. Leave a little portion open if you want to go bullish. But if that's the big bearish turn, right there is the run. The ideal place to go short right there. We have not had a body trade above that level there yet. You see that? You want to get a body above here. So you're stuck in between one going longer and this one going shorter. So there's the wrestling that you look for now. So if you see this give way on the downside, mean threshold's the last line of defense. And if you lose that and we close below that level, we're looking for extending the range. I'll close my trade out before, like right there. See, it closed it out. Now I'm going to close that trade. That's my rule. And if that runs back up through there, I'll just get back in sync with it when it gets above here and here. I want to see that level get taken. Otherwise, if it doesn't and reverses and comes back down on me, I've got a consolidation here, a cam 1 model forming. So you can see a cam there. And I've got my profits for the day. And I've got combine that with the profits for the week. It's a nice week. So watch the body get above here now. Good, body's above. Now I'll use that for support. Look for a carrot here. That's my rule. And sometimes it doesn't work out. Didn't take out the low with a body, right? They caught me in a bear trap there. I thought that was going to go bearish. As soon as it breaks that low, that's me out. And then it reverses, takes out that candle's high, comes back and gives this one a tap. Now I want to go long right off there. You've taken out that high now. You don't want to see this low get taken. So the stop loss will sit down here. If we take out that low, then that last little swing above was all it needed to take out liquidity here, hit the carrot. And I want to see that low get taken on a close now. It may help using the imbalances indicator from Fadi or others. It shows all the tiny fair volume imbalances and fair value gaps we usually overlook. Good morning, Mr. Tristan. How are you doing, buddy? Mean threshold, line in the sand, right? Now you're looking between this guy and this guy. You got to get above that level there. These candles here on a close and through the mean threshold of that candle, because you're going mean threshold to mean threshold now. And who wants to play in that? Tristan, I don't know how to get this in that indicator you gave me into this account. Like my DAZA 911 account. See how we traded through that mean threshold now? Take out the lows. We traded below here, back up inside it. You're looking for this low to get taken. It does. Now look for this to support price for continuation on the downside. Look for it to come back up in there. And then you can sell that short off there. I'll put my stop loss up here. It should be above that candle right there. Just a couple of ticks above this candle because I don't want to see that get the mean threshold get taken on that candle. And I'm just going to move that into break even. Yeah, that indicator, I can't get that indicator in pulled into this account for some reason. I tried to just grab all the data on it that you built into the Pine script editor. I tried to cut and paste it. It didn't seem to work. It's hitting that once again. So we've got this reverse here. You've taken out all these lows. I don't want to see a body get above here inside this candle. If this is a reversal now, you want to see this start digging back down into that level. So it's 11 o'clock. You should typically see a reversal at 11 o'clock. Trade back into this order block here. So I'm going to try going short there one more time. And my stop loss will go right up there. Daniel Russo. Thank you, sir. Since the indicator is unpublished, you may have to go to the link I provided, maybe star it as a favorite so it shows up under your indicators. I'll try to see if I can figure it out for you. Edgar, thanks a lot, Darren. I've got to go, learning a lot, but still cannot foresee the candle behavior and trend as you do. I wish I could grasp this faster. Any pointers what to study to reinforce? Study Michael's, anything that's Michael, man, I tell you, anything ICT, study that. Just study it like there's no tomorrow. I don't have anything for, yeah, see, now we're running back up into this level here. This reverses, so we've taken out this candle on a return. We could be coming all the way back down into here. So now I'm stuck between here, going higher. So now I'm going to mitigate any losses. I don't want to see that come back up into that candle. And if it comes back to me and taps me out, I will take that as a an opportunity to get out of this trade. I'm out there. Small loss. It's a logical place to return to. Now I want to see if this continues coming lower. It makes sense it could come into that. It's like the consequent encroachment of that. That's a good thing I got out. So we've got a body closing above it right now. What's right on it? It's right on it. So that'd be like the perfect place to go. Now we just come back, found support at this. You look to see if that's going to go higher now. Watch the mean threshold of this. It has to take the next, that's the next PD array inside this range. We have not closed the body significantly above that high. So you want to see it get some motivation there, get up. Look like price is reacting off the 1 minute bullish breaker to go higher. The 1 minute bullish breaker. Yes, indeed. I like that. Good call. If we just broke above here, I like this. We've run up, come back down, found support inside that. Now you're looking for this to go higher. Mr. Carrot. We'll put little Mr. Carrot up there. Don't forget you've got this level here. We've got a little lows taken. We've got a reversal. Body trades above it, comes back, found support at it, pushing higher. You want to see it get through the mean threshold of this candle, or consequent encroachment of this candle, and push up higher for the carrot. And you're looking for this upside objective here. And then obviously running higher. That's the squabblers, 17, 18, 19, 19, 21. Either one of these could start making that little swing low. I want this to be the 19 or 17 candle, make the low, not go down any lower than that. Half that wick. Let's see if that's a line in the sand for us. You want 17 to be the swing point now. 18 reverse against 17, and then 19 reverses against 18, all the way up to 20, 21. So there's 17, 18 reverses against 17, unless it makes a low first and then makes the reverse. There's 18 reversing against 17. Then 19 should reverse against 18. And then 2021, we should start seeing higher. I don't want to see 2021 getting down in here. Looks like, okay, remember, whatever two consecutive candles close and open do not match. What do you make of that? Whenever two consecutive candles close and open do not match. Oh, we call that, it's just a gap. So in other words, if this, like you see this one down here, for example, this is a good example right here. See how this one's close is here and its open is just slightly above it, and then gaps down. You still treat this as a bearish block. And look at it as a potential area sensitivity. I only look at that when it trades and creates a gap in the price. There's the 2019 running against 18. See, 18 makes the return against 17, 19 against 18. So maybe want 19 to be the low. Then you got 2021. So if 2021 starts to run back into here or back into that thing, so yeah, when the prices, the open and close don't line up, if they create a gap, like there's a gap, slight gap in here. If you stretch this out, you'll see there's a gap there. That becomes a very important area. It's an imbalance, price imbalance. We have buy side and sell side, but it's an imbalance. It's not a lot of, it's like Michael talks about how, you know, you put a paintbrush over the top and you leave these little gaps in price. Okay, it's not a full delivery. So those become areas of importance. And that's why you saw me put that line on here. Oh no, which one was it? Remember when I had that line sitting out there? I can't remember which asset class it was on, but that line, and I said it's going to come back to that little area, and it did. Traded below it, tapped it, went lower. That's the very thing that you're asking about, which is that little imbalance in price. When you see those little tiny imbalances like that, look for those areas to get revisited later on. Whatever, 2 consecutive. That worked for me. I added it to my favorites. Restarted trading view, and then it showed up in the dialog when you click the indicators button. Ooh, okay, so I just click on your that link you gave me and then just add it to favorites. Is that it? I'll do that. Thank you, sir. I'll try that out. Since you trade in the browser, you may just need to refresh that once it's your favorites. Sure. Okay, thanks, Tristan. I'll double check that. Oh yeah, market often repaints those imbalances. You got that? Ascension. There's the 19, 20, 21. Now I want to see that I want to see 22. Good. Now I want to see 23 all the way up to 27. Start going higher now. I tell you, the time in a bottle, it works. It looks great. Works beautifully. Not perfect, but it's as close to the algorithm as I could get before learning more about little swing points and stuff. Now I use my swing points, inversion, fair value gaps as key levels for when I'm doing trading. But now you look at, remember I was saying 17, then 18 goes against 17, then 19 goes against 18, and then 2021 reverse against this. So that's what you want to see. Now these are all in line. So 19 ends a run, 18 ends a run, 16, 17 ends a run. Remember those 3 definitions I gave you for the time in a bottle? There's one example. It ends a run. 2 ends a run, starts going bullish. That's 18. 19 ends a run, and then starts a new run. So you're 20, 21, and if 21 doesn't make a swing, then you expect 27 to create your swing. And if 27 doesn't create the swing, then wait for 30, 32. And we're at the top of the hour there, right? So we should be aiming for our carrot up here at 20, between 27 and 30, 32. You got it? Okay, excellent. Are we going to take another charge on this level here? That is the question, my friends. That is the question. Are we going to take another run on that? So we get a body trading above here. I want to see this wick, 50% of this wick hold price now. Let's get around. I had to weather. I got in on a long off of here. As soon as I saw this, I was like, oh, I'm going to get that. Did not trade a body above there yet. Okay, there's our carrot. And I got in long there. I had to weather all of this before it finally put me in profits. Now I'm at break even. I don't want to see it come back to this old candle here. Now I want to see that just keep marching forward for the 27 candle. That's the carrot. Now where's our next little stick? Carrot and a stick. Where's the next one? What do you guys have for your next one? Rejection block right here, 770. On your 15-second chart, you'll see this level right here. Remember that 50 level I was looking at? That wick, I didn't want to see it break the 50%. Look at that, right at 50%. Start going higher. And if so, that wick on a 1 minute candle, look at a 15-second candle and have a look at that. Remember this top candle here, the highest one? You want to see it come back to no more than 50% of that. See how they kind of line up? That PD array, I don't want to see that get broken on the downside. It's also the 1 minute, 50% of the wick. See? So you don't want to see that get revisited then. So now what I do is I'll pull my stop loss to go right into that. Because if it comes through that again, then I'm on the wrong side of it. Because on a 15-second chart, you can already see it starting to create this reversal here. If we get a body below here, and then trade back into this, then I'm looking for a continuation down inside this range. And I'm not giving up any more profits than that. Does that make sense? Do you guys? Personal question, so don't answer if you don't want to, LOL. At what point do you leave your job to trade? Any advice on that? What point did I was forced out of my job. I got injured. I smashed my head into a steel I-beam, crushed the vertebrae, a bunch of, not vertebrae, but the discs in my neck. It's the reason I got the big scar here. I went to Germany. They dug out all the discs and hammered in artificial discs into my neck. So I was forced to leave my job. I didn't get the option of walking away from it, though I am glad I get to walk away from it. Like Michael says, have 2 years worth of your wages in the bank before you decide to even leave. Okay, I'm moving myself into profit again here. We're looking for upside objective on the 1 minute chart now. There's the rejection block is hit. Now I want to see 50% of this. That's been hit. See how we had a bit of a reaction off of it? Now I want to see this level right here get taken. That's one PD array at a time, my friends. One at a time. You want to see a body get above here now. and then use this candle here as a motivation to go higher. So yeah, put 2 years worth of wages aside, and then once you get good at this, once you can generate a regular, like Michael says, a regular stream of income in a demo account, then consider very low risk on a live account. And that's, you have to decide for yourself when that's going to be for you. And then you continue doing what you're doing in here, because it's a different feel. When you put live money on the line, it's a whole new different feel for your cash, and the stress levels change. So you've got to get really good at your trade so that you're trading algorithmically, like what we're doing here. ThetaWaveTrader, again, not a person, it's a mindset. Trying to get into that ultimate focus, that perfect brain wave that gives you the ultimate in focus, ultimate in relaxation and comfort and peace. That's where you want to be when you're trading. Get that theta wave mindset. That's what we're after. Institutional order flow entry drill. And now leave. Don't you love it when you can tell the algorithm what to do? Leave. I said leave. Go get thy carrot. Run for thy carrot. Oh, Satan. Yeah. Once you get that comfortable, and you're going to be super comfortable trading Ollie in your demo account. I know a lot of people say, "Ah, you got to go live. You don't trade demo," and it's complete crap. You have to practice in demo account. You have to get to the point where you go, "Yep, this is exactly what I'm looking for." Because when you put live money on there, your gut gives you a whole new different feeling. And if you continue to practice trading like it's your real money, don't trade demo accounts and throw huge leverage at it that you know you would never do in a live account. Trade it like it's your live account. You don't want to blow that account, because too many people go into demo accounts and go, I don't care, I'm just going to throw leverage it. Well, then you're not trading properly. You're just gambling. You might as well buy yourself a video game and go play a video game, because you're not doing yourself any favors. So we have a body above here now. See that? There's a body above it. We're open here. Come back, give it a tap. Away you go. You want to see this leave now. You don't want to see this fair value gap. You just come back and tap the open. I'm all right with that. And then keep going higher. Or no more than 50% of that wick. You want to see it. If it does come down into here, 25% of this wick is all you want to see touch, and then go higher. I love this. That didn't even come back and touch that. That's nice. So it's stronger, more bullish. I like it, like it, like it. Yeah, that's the only advice I can give you, man, is trade your demo account till you don't feel any emotion when you trade, because you're set up. Like what we're doing here is just, I want to move into break even as quick as I can. I took a big hit on that first big run down this morning. Remember I was calling for this to go higher, and it caught me on a short. I was in that on a live account, and I went, oops, I just took a hit there. That's okay. Don't sweat it. And I started getting all sweaty, and I thought, just wait for your setup to occur that you can get back into it. And I got back in here somewhere, traded down to here, saw this reversal, got out, and then get back in sync with it. Get yourself unstressed, and now I'm back in this one, and it's just came back and taken me out here. I had my stop loss on a 15-second chart sitting right in here, and it literally came down and tapped me. So I don't want to see it get, I didn't want to see it get below that, and it did. The mean threshold, I was just below the mean threshold of that candle, and it came back and tapped me. So we'll see if that pans out, if that is correct, and this starts to come lower now. And it did. See, it would have taken out my stop loss anyway, right? That's the line in the sand for me, and I have to stick to my line in the sand. And earlier I was caught on that, and it took off. Here's an indication where it would have taken out a huge amount. It would have taken out a much bigger chunk of my profits because it's reversing. See how the body trade below it right here? And then what does this guy do? Comes right back up and goes, give me a little kiss, and then continue going lower. Give you another little kiss, come back. That was a nice little kiss at the front door, all the way up into this candle's high. And that's your breaker that runs up and takes these highs. So that breaker is your fair game. We come back up, refill here. And if it just augers down now from here, that's what you want to see. And I just got in short there. I got in short off here, and that's now I'm going to move my profits into stop loss into profits, and I'm going to keep my money. So now I want to see this really start driving down now. Yeah. Yeah, you can have the cord to the laptop. Stand by, folks. I need to go back and give my wife a cord here. So I'm like right just above this here. So I'm expecting an institutional order flow entry drill just to pop up in here and then go lower. So my stop loss is just above here now. Now I'm moving it right down to right there. I'm sitting right on that. That's my stop loss. I'll be right back. Where did I put my? Oh, it's right here. Hey, oh, it literally came up, kissed my stop loss, did not take it, literally just sat right on that. Wow. Okay. Did not take out my stop loss though. Um, it's been pretty choppy. I was hoping for some easier price action post-election. It's been tough for me. Using your knowledge is definitely helping me follow price easier though. Good for you, JC. Can you use any wick or any only longer wicks? For what specifically are you asking about? That's got me there. I want to see this, take this candle's high now on a close. On a close, not a wick. What's your question? Sorry, I would missed your question there. JC, can you use any wick or only longer wicks? You use the longest wick that represents that little I'm going to try a little, I'm going to try this down here. Burp, 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 burp. Buy. I'm buying off of here. And I'm moving my stop loss. Into profit. Just covering it. Sorry, answering your question. So if we're coming up into here, you'd want to see this wick because it's the largest wick inside here. It's the wick that has the longest representation. I think that's the one you're looking for. Like for this one here, you'd want to see half the wick. You don't want to see half that wick get traded through or the body. This is the same kind of principle. You want to use the highest wick, the lowest wick, or the longest wick. So we have consolidation here. We've popped up, gapped up above it, came down, gave it a little tap for continuation. We're inside this range here. So let's do the same trick that we were just, Hadi, I was teaching it. I've taught Hadi. I'll teach you, all you guys the same thing. Do this thing and we'll just run it just because it's a 50%. So move our stop loss to break even, take half the trade off where we only got one on here anyway. So we didn't quite hit 62% yet. If we hit 62%, I'll move my stop loss here right to equilibrium or 50%. And then I'll trail this up. So you can see if this turns against us here, I'm going to move my other stop on my live account here. I want to keep up with that as well. Imbalance. Again, you want to see something with some gusto getting out of here. I don't like seeing all this cluster of as soon as I see clusters like this, I go, ugh, are we building a new consolidation that I need a displacement on? Or because if you want price action to be clean, you want to see it come up and just start motoring, right? So there's just over 50%. So we could quite easily return back and take out our candle, a return right back through our level here. So I'm going to move this up a little bit higher. We've got a little imbalance sitting right here. And I'm sitting right on top of a place that could just literally come down, tap me and leave. So those are the, yeah, see, literally come down, tap me and then leave. Okay. So let's just see it leave. So it did. Typically, if I had more than one on there, I would have taken half of that off, moved to break even, so then it wouldn't have cost us anything. So this reverses and comes all the way back through here now. Even on the wrong side of that, you caught a little piece of the price action running back into institutional or optimum trade entry reversal. So the fact that we're wicking in here multiple times, you want to see that just tap it once and get out of dodge. That's why I don't like seeing all this. And I start getting all nervous. So I want to inch that up just because I don't trust it. It's not clean. Always wait for clean price action. Don't sit there and go, oh, I'm going to have to endure this. No, you don't. You don't have to be in it at all. Stay out of it. As soon as it starts doing that, move your stop, get your stop protected, because that's not normal, easy, smooth price action delivery, right? So we're right back into this order block again, or this little cluster we have here, consolidation. And now you want to see it. I wouldn't get excited about this until it gets up on top of here again. And then you're already above the equilibrium. So do you want to participate in that? I don't. Now you could take this one from this high here and you would have seen something even more dramatic. So if that was your entry point right there, as soon as you get to 62, break even, 70, 75, 79% perfect exit for optimum trade entry reversal off of this smaller range here. And now we're back into this range. We've traded below this level right here. There's a body trades below it. You come back up inside it with a wick. No other bodies break that high right there. You see that? This is just staying in price action and studying it as it's going right now. So we're lower in this range, and I got nothing in here except for down here that I'm looking for that would hold price. So I'm looking right here to here. And it's just right in there right now. See that? Schmuck. Through it, heading lower. That's why you use the fib tool to save your ass. Otherwise, if you were trying to go long off of that, like I was, and I go, oh, I don't like that. We got potential reversals here. Now we've taken out that high, and sure enough, down you go. And now we've traded below this level and we're extending deeper into the range. Come back, give that a little kiss, and then sell that from there. I'll move my stop loss into profit already. It's going to come back one more time, sell it again. And now the stop loss goes right above. I'd have to be above that candle there. Come on down. Now I want to see, I don't want to see that anymore. So I'll move to break even. Zero stress, right? Once you know where you want to go, zero stress. Now, mean threshold of that candle has been hit once. I don't want to see that get hit before we take that low. One day I'm just going to try and trade PD ray to PD ray, so, and just keep going buy, sell, buy, sell, buy, sell, so you guys can see how that's not the kind of habit I want to. I don't really want to do that in front of you guys because I don't want to stimulate you guys into just copying trades. I want you to get your trade set up there. We've hit this guy right down here is what I'm looking for now. Oh, it's already hit me. I'm looking right here. Here's that question that to Sanji, I think his name was. Right there. Right there. That's what we're looking for. Watch this level here. We've come back up into that fair value gap. I pulled my tool. I pulled my tool. I pulled my stop loss, not my tool, my stop loss to this level here. And if you're looking for inside this range right now, look at the where you're sitting at 50%. There's an imbalance right there. So you want to touch that price action right there, and that'll start coming back down lower. If you lose the mean threshold, which is right here, you want to come down lower now. If you lose the mean threshold of that candle, then think about coming back into this range, and this now becomes the reversal. Got a body, it's changed direction, so we've got a loop low, so you've now traded above it, now you've traded back inside it. If this starts to move higher, you want to see it get through here, get on top of that, find support at that, and then start looking at higher range. Because if you pull your fib tool from high to low here, if you're on the wrong side of this, this is where you get to see if you trade long on that there, and you're coming back to 50%, 62%, pull your fib tool and watch here. Confirmation is I need to see it break above that, come back in below the discount, and then start using that to go higher. There's the mean threshold, it's been hit once. We have the reverse here. We're long right off that perfect entry for a long right there. And if it trades below it and comes back to it, close off your trade. We're coming lower. And if you're just trading inside that range right off that little piece there to the mean threshold, that's it. First objective done. You got to be disciplined to pull that though. Greed will tell you you want to go higher. Pull yourself right there inside that small range. That's the first objective, second, third objective, and then if we can get confirmation, you can reload it on to go higher. So watch this level here. If we traded below it now on a close, so imagine we're going to put a, you're not taking a trade here, we're just going to pretend like we have a trade going. Right off that level right there. So watch that. See, I don't even like the wicks. We've already been through it already. So, but we'll anticipate. Let's say our stop loss is sitting here. That's where our entry is. This, I don't even like that. I'd be out. Just the fact that we're multiple tapping it already. It's not giving us the clean, takeoff that we're expecting. Like that. You want to see a punch out of there, right? There's your rejection block as the next objective. Bing, that one's hit. Come back down. Run up to that. So if that's the entry, watch. See, I'd be out right now just because of the multiple taps. But the rule is if a body breaks below there, that's just me playing. It plays chicken with me, and I get nervous and go, nah, it's not doing what I want it to do, so I'm out. Body didn't trade below it, so you're still long. There's your first objective, second, third. Hit it. All three of them are done. If that's just a run on liquidity now and it comes all the way back through you, watch for this candle, because now we've got a swing reversal or a potential reversal and a potential swing reversal if we take that low. And again, you have to trade below that level. So watch. If we get to 50%, stop loss is sitting down here. You've already paid yourself a portion on the way up. If it trades into this right here, I want to see a portion of that stay open now and go higher. Don't you love it when it does what you want it to do? Right there. Why did I want it to stop right there? Because there's a small reversal right here. We took out that low, ran higher. Look at this order block. You want to come back and give it a kiss and stay in the mean threshold or consequent encroachment of that candle there and go higher. And because it's waffling here again, I don't like that. I want to see it give me some legs here. Up you go. Get up there, and we're above the mean threshold of this candle already. So there's an indication that we're probably going to go higher. We've closed above that. So our little bull flag people, we don't believe in bull flags. The retail people are like, it's a bull flag. It's a little tiny one, but it's a bull flag. Right now that supports bull flag. I like that idea. Now if we close below the mean threshold of these little two candles right here, or we close this in, then it loses its luster for me. Like that. Come back, fulfill. You want to see that snap off of here now. Nope. See that? Loses its luster. Through the mean threshold. Wick did the damage. Came all the way back to our little level again. Look at that right on there. Snap off it. Snap out of it. 9. This is not doing it. So watch here. And watch there. So you see how you would have paid yourself on the way up looking at this small range at these PD arrays? Always look for your PD arrays. Don't get greedy and aim for way up here. When you want to stay in price action on a micro level like this, see how we traded below it? Watch. You're on the wrong side of this. Stop loss is sitting here. There. Out. You're out of your trade now because it's coming lower. Typically, it's coming lower. So now you're out of your trade. So now you break even. Let's say you didn't take any of that there. That was our entrance. We're looking for the 50%. We didn't get it. It traded below us. That's my rule. I'm out. And if it takes off right now, I don't care. I'd get back in sync with it once it gets above here. Otherwise, I'm anticipating that coming down to take this low out. And it doesn't matter if it goes out. I really don't care. So I wait for this to go back up here. And you're in a consolidation mess. So do you really want to beat yourself up because you got out right here at break even and said, ugh, why am I not in this trade? This is all shit you didn't see coming. So don't start beating up a decision you made here because of these candles here. Never ever attack a decision you made in the past based on the information that you had and judge it based on new information. You didn't see this coming. I didn't see it coming. I was calling for that to go lower. Now, if it takes that high out, I want to see this high, a body trade above this high, and use this cam model here for an entrance higher. All that is just in the consolidation above it and in that rejection block of this puppy here. We didn't get the high taken. Couple more minutes and I'm out of here. It's been pretty choppy this week. Can you use a wick? I was a software developer for the same company for 20 years and they terminated for not wanting the COVID vaccine. Yeah, that was a huge issue for us in EMS as well. Because we were an ambulance, you know, you got the exposure to it. They said you had to get the shot or you have to book off sick. And we were like, what? Yeah. You have to book off sick. So you'd have to book off for 3 years. And then they just terminate you because you haven't worked for 3 years. So I hate it when people leverage me like that. They force you to do that. So there's a lot of people who had that issue with COVID vaccines and stuff. Don't even get me started on COVID vaccines. We're here to trade. I've got my strong opinion about that stuff. It's not a bloody vaccine. Software developer terminated me. Do you live in Germany? Dal, if you're talking to me, no, I do not live in Germany. I live in Canada. In the mountains. Ola Deely, in the time in the bottle video, why do you have some of the times bolded? Did you watch the video? If you watch the video, you'll see why I have them bolded. So I tell you what, I'm going to let that sit and I'm going to let you figure it out why they're bolded. It's in the video. You can see that just by looking at the screen. You say, whoa, there's some bolded ones. The secret is in the video. So watch the video. And they're bolded for a reason. So you see how we traded above this, and look what we hit right there. Oh, no, we're actually just a slight bit shy of it. Here we come. I just missed it. I got long on that from my my other account. I didn't click it in front of you guys, but that's the continuation I want to see. Mr. Pips, we appreciate you, D. Thank you very much, Mr. Pips. Hans, first fair value gap equals PDH. Good advice. Sorry about the way your job ended. Must have been tough. Trading real money is completely different. I've been consistently profitable for a while since finding ICT. Good for you, man. Good for you, Ollie. Ollie, if you haven't traded for well over a year, along with your profitability, I would not even think about leaving your full-time job. You need to experience various market conditions as it changes. I agree. Throughout the year, and your profits will result. I'm 4 years in, and I'm not thinking about that until I scale my own account, which will take probably 2 years on its own. Good advice on the savings. I've cleared all debt apart from the mortgage with trading. I get my money and saved up. This channel has been a godsend. I don't copy any trades, but hearing your logic has really helped solidify ICT teachings. I'm glad that's helping you, Ollie. I really am, man. Sorry, I'm just catching up on all the chatter here. 719, check the fair value gap, please. 719. This one right here. They just come back and filled it. Are you looking for that to go higher? Now I want to see that break structure again on the upside. Not just return into this. This is just a slow, insidious climb up. Come back down right into that fair value gap. Didn't take out low, no body close below it. And we run up above this level here. Now you want to see a body use this candle to go higher, and this candle. So get a body above there. And hit the like and subscribe, you guys. He deserves it. Oh, thanks, Ollie. I got 6. I don't know how many you guys got, but I got 6 likes throughout the day that I can see. I haven't refreshed my screen, but there's 45 of you in here. It would be nice to get 45 likes. I want to copy your trades. There's a volume imbalance on the 15-minute chart. Volume imbalance. Yeah, volume imbalance. Where's the volume imbalance? Which side are you talking about? Oops. I'm on a different chart here from you guys. Volume imbalance? The volume imbalance, you say? I don't know which side you're looking on. Point it out to me. Tell me what time your volume imbalance is on that you're looking for. See how we didn't get a body above here? If you got caught going long on that, you did not follow the rule. And that's my rule, not your rule. But my rule is a body must break that, not a wick. And here's why. It can turn on you and come right back and take you out. If your stop loss was sitting right there, you just got your ass handed to you and you were like, ugh. It took out a little tiny swing there, reverse, body trades below it. You go, oh, I'm on the wrong side of that. It's coming lower. If it takes out that little imbalance sitting right there, it did. And you go, oh, it's extended. and took your stop loss. Gap below it, came back up, gave it a kiss, and we continue going lower. That's the joy of being in a 15-second chart. You see it way before our 15-minute people or 1-minute people do. But right there, you go, ooh, now I can get back in sync with that because I'm on the wrong side of it. Run for these lows. Come back up inside. What are we touching here? This order block here. Now we have had a body trade below this. You want to see that continue heading for the lows here now. On the 15-minute, how about crude oil look before you go, please? Yes, sir. I will do that for you. Get connected. 33 trades today. Sheesh, kabibble. That's a lot of trading. Okay. So if this holds, I don't want to see a body trade below this. The fact that you're actually wicking into it already is not a fun thing for me. I like to see that right now. Snap off of there. Snap out of it. And then you want to see a body get above here. Get back into this range. Truly a market structure break will be above here. We get above that, then look for these highs to get taken. See how we already had that candle wick through it. Now we got a body close below. We're heading for the lows, so it's going lower. Watch the 50% of that wick, which happens to line up with volume imbalance and the 930. Oh, two little volume imbalances and a liquidity void and a volume imbalance. And it lines up quite beautifully on that 50% mark. So if we lose that on the downside, look for a run down in further. We have a little bit of liquidity above here run. We have a trade below this fair value gap now becomes an inversion. Look at this order block. We trade through it on a close. Look for it to run back anywhere up inside here, right there. See how it just came back and kissed it? Now you want to see that come lower. That's the little kiss at the door. Ba-boom! There you go. Just as we see it. As you see it, my friends. Just as you see it. So, yeah, I'm lower in that for now. And you're looking for imbalance 69.55, my friend, right down here. 69.55. And see how it acts off of that there. If that's the lowest one inside this run and you get a reaction off of that, ideally on a 15-minute chart, it's got to get way back up here, and that's more way above the equilibrium. So yeah. So for you got to see a fair value gap forming, preferably down at 69.54 to 69.55. Anywhere down here, look for a potential reversal. And you want to see this candle get taken to the upside. So the upside objective would be in that box right there, or the Wednesday's 9:30 open, 9:35 first initial fair value gap. So if you see that reversal in here, that's where I'm aiming for a quick little liquidity hunt. Leave a piece on. If you break through this level here on a close, 69.77 on a close, look for further upside. Run for this rejection block. 50% of the wick. That's the wick, the largest wick, not that one, but the big one. 50% of the wick, then the high. Look for 50% of the wick, then the high. That's the PD arrays. See how this one ran up into the rejection block, hit it perfectly, and then snap right away from it. So those people who are looking at this to run way back up in here, getting too greedy on their PD arrays, that's it right there. And I've told you a million times, or almost a million, like 900,000 plus, pay yourself at rejection blocks. I watched The Time in the Bottle. That is time cycle trading. Can be good if you know how to use it. Yes. Is that what you call time cycle trading? Somebody else has invented time in a bottle before me? Have they got it, the exact same numbers that I've got? That's my question. And if somebody else, I'm sure out of the billions of people on the planet, someone's figured out the same thing I did. I don't consider myself that intelligent. So it'd be nice if somebody else found it. That I'm all right with that. I didn't copy it off anybody. I actually built bots that went back in time. Whatever data was available to me, I built these bots that would go back and it would search every freaking candle on a 1 minute chart as far back as it would go, on a 5 minute, on a 15 minute, hourly. I sent bots back and I gathered up data to give you those, and I put them on a spreadsheet, and I had the AI in Copilot interpret the data for me. And this is how it used to be. This is how I used to be. This is the old school. Can you guys see this? Where's my thing here? Can you see that? I used to mark I used to go back. I spend hours of my life going, and I've got pages of these things. I go back. I'm keeping those as an old reference. But I went back and I marked every frickin' turn that occurred on the charts. Every turn for hours. I would go back to the beginning of the year and I would mark, and I tick, 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 and I'd just obsess over it. So what you guys get the fruits of my labor, and I obsessed over that. That's the fun part about having ADHD. You kind of get hyper focused on stuff. And then I found out how to build a bot, and then I had the bot do it and double check what I was finding on my sheets. And each one of those blocks would slowly fill in with more black pencil. And I go, oh, that. And then you could see distinctively, like when you draw, if you know anything about art, and you know what hatch or hasher lines are, the more you cross hatch, the darker it gets. So the more I put dots or little ticks inside these boxes, the darker the box got, and it lined up with a time. And I was like, that time is very specific. I wonder if my bots figured that out. And I go back and my bots figured out the same thing that I'd spent many hours making little tiny ticks on before I finally got what I was looking for. It was what I call my time in a bottle. So I hope you guys appreciate the time and the effort that I put in there to give it to you real quick on a 42-minute video. You get 42 minutes of my 1,000 hours. I don't know how many hours I put in that damn thing. I spent years. I saw something. My brain first figured I see something going on here. Look for that 55. Ah, boom. There you go. You got your 55 level now. Now, if you close below that level, which you are, you're looking for lower prices. Oh, Craig, did you catch that short? I gave you the short right here. Oh, you don't short, do you? Okay. How much time in the ball? Too bad in Canada you don't get 30-year mortgages. I can't believe that will happen to homeowners at rates are skyrocketing now. They have 30-year mortgages in Canada, don't they? Or are they 25-year mortgages? I don't know. I don't know what they are, but I haven't paid a mortgage in a while. Both of our houses, we own both of them outright, so we don't have to worry about mortgages. But yeah, I don't envy the rates you're in. My parents were back in the 1980s when interest rates were 18% plus back then, and they managed to get theirs paid off with a 12% or 10% mortgage. That's insane now. And people complain about 4 or 5% or 7%. Mind you, they're 7% on a $30,000 home 50 years ago is a lot different than a 7% on a $1 million property or an $800,000 property. Now you're like, how's anybody going to pay that off? Because your wages have not gone up as exponentially as the cost of mortgages, especially in Canada. hit refresh. You only deserve 6. Thanks, Dal. Appreciate it, bud. 8:15, 8:30, 15-minute volume imbalance. Geez, we're way back there. Sorry. JC, 8:15 volume imbalance. 8:15. Oh, we're over here again, aren't we? So you get the 55, you would have got paid at 55. Now you're looking for this. Remember, we said we're looking for a reversal to occur right into the rejection block. See that? Right into that equal lows. You did not even get to go lower than that. Where did that hit? Oh, right there. We'll see if that continues to draw through here. And that you don't want to see more than 50% of this wick give way now. We've got a body. You have to include this imbalance here as well. From there up to there. You got to get above this candle. Find support of this candle. Aim for up here. So far you're getting what we talked about. We want to see it drop down, create a fair value gap, trade through it, get on top of this, and then start aiming for that upside objective. So if you're inside this range, you got to close above here, here, and go higher. And it's going to be over 50%, so I wouldn't touch it until you start getting above here. 8:15 to 8:30. Sorry, I'm back over here. I want to get JC's question answered before I go. 8:15. Look at that little baby right there. Gotta love that. 8:15. Oh, you're on the 15-minute chart. Let me have a look at this thing here. 8:15 volume imbalance you're looking for, right? 8:15 volume imbalance. Oh, is there a little tiny one in here? Oh, they look like they're pretty lined up there. That's a fair value gap. They're on. It's a BISI. That candle's high to that candle's low. It's a BISI. I don't see a volume imbalance in there, my friend. There might be something like if you rip it open. Nope, I don't see a volume imbalance in there. Waiting to buy lower. Also lines up with the 50% level of the regular trading hour gap. So 15-minute. See how we've traded, but we wanted to see this trade above this candle. This is kind of like what Derek's looking for in his oil trade. See that candle there? And compare that to that candle there. Almost the same kind of setup, right? Except this one has a big wick down here. We have to pretend like that wick's not there to see it look like it's the same kind of thing. So you see how we've traded up and a body trades above it right there. That's my rule. It's got to trade a body above. Body trades above, and look what it does. Comes back, gives it a little kiss, bing, and then starts running up into that range. You have to ask yourself, though, is that 50% of that range or less? If it's not, don't touch it. And it is. See that? Came back here, give you a discount. There's 50% of the range. Discount. As soon as it hits 50%, move to break even. Goes to 50. Take a portion off. Hit 62. Move to break even. Or move to 50%, it comes back, takes you out. If it comes back to your trade again, hop back on again, 50%, move to break even, take half off, hit 62, pay yourself here, move your stop loss to 50. It hits 70, right, or 60, yeah, 62, move to 50, 70, move to 62, and it would hit 70 there. You would have moved to 62 and it would have came back, took you out there. Comes back, gives you another entry down in here. Didn't quite give it to you here, but if you took it there again, you hit 50%. Anytime it gets back below 50%, just keep doing this over and over again. Every time it runs to 50, move to break even, pay yourself at 62, move to 50, blah, blah, blah. Just keep doing that over and over and over again until you get something break that candle's mean threshold. That's another little trick you can use. I used to call it buffering for some reason. In other words, if my stop loss is sitting down here, I get to buffer the trade if I'm wrong and it comes back against me. I took all these wins in here. with a 50, 62%. I just keep paying myself over and over. Then it rolled over and came back and took me out. Then any losses I would have taken in here, I would have made up multiple times, cash in 10, 20 handles inside there. Anyway, that's that. Oh, you guys are asking questions. That's what's keeping me here longer. My wife's going to come in a minute and say, get out of here. You're done. Yes, used it in my retail trading days. I used it 30 years ago trading futures grains. Really? I wish I could understand your time in a bottle. Do you have a video explaining it? Yes, it's called Time in a Bottle. There's a video on my screen, on my channel. The whole Time in a Bottle is on there. And I'll show you how you can apply it in here. So you can see how the numbers, how these are swing points. Swing, starts new direction, finishes off, starts a new direction. So it finishes off that run, starts a new direction. Now we're looking for 45. That's a 15-second chart. You're looking for 40, 45. There's the swing, change direction, continuation, starts a new direction, ends. You're in, this is a seconds chart, so you can't really see it too well. You'd have to count individual candles. So this is just giving it, these dots are giving it to on a minute chart, not the seconds chart. And don't sweat the time in a bottle. Time in a bottle is just another tool. The stuff I'm giving you has, whatever I've been sharing with you has been very little to do with time in a bottle. It's all based on order block breakers. Once you trade above a breaker, come back and find support at a breaker, you expect to see support and continuation. So, yes, that was a lot of work. Thanks. You have 45 minutes video about the box. If so, what is the title of it so I can search for it on your channel? You'll see it. I'll share this with you guys. Time in a bottle is right there. Time in a bottle right there. It's a 42-minute video. 3 ways to attack a consolidation. You can see that there. These were a bunch of unicorn trades. You have to go way back and search for fail-safe if you're interested in the fail-safe setup idea. Pulling the fib tool. Those are all the things you can use for looking for my time in a bottle. Give it a kiss, man. Give it a kiss. Yes, it's a lot of work. 45 minutes in the box. So if you search it up for your channel, MBT on 50-minute chart looks like it wants to clear the highs from earlier. Ooh. How come that didn't take profit there? Oh, I haven't taken a profit yet. Oh, I wanted to go long there, didn't I? Was this long or short? That's a stop loss. I wanted to go short. Oh, crap. See, I didn't put a take profit in, and now it's coming back against me. Dummy. Okay, I'm going to close that out. That was a dumb move. You notice I had my stop loss, but didn't have my take profit. I just went, yeah, I like that for a short. And it went all that short time. And I just had this opportunity to say, Darren, where are you? We're coming back. Where are you? Even if I took this thing here and did this on that one, I could have made a good $30 on that. So if my entry, let's see where my entrance was, executions. There, so we got in here right off there. We said we're going to go short on that. And then it came back up. Stop loss was sitting up here. And there's 50% of that range. Move my stop loss to break even. Take a chunk off. Oh, I have one, so I would have just moved right into here. Because in other words, if this takes out that high, then that's my reversal, right? That's the area I want to see get taken to the upside. Then I know I'm on the wrong side of it, which is what later you see it come back, take that high, trade off of it, and start going higher. So that's where my stop loss would have been had I moved from here to here. And then you wait, you get to 60%, then I would have moved my stop loss from here right to there. And then as soon as it starts to trade back through here, you look at this, you go, ooh, this is a swing point. If it takes out that swing point, I'm on the wrong side of it. So what do? As soon as you see it come up here, you go, ooh, that's not good. I don't want to see it. I'll give it 50%. That's it. 50% right there. And it literally, oh, it stopped here. Yeah, it came up and then went down a bit more. Came back up, and you think, ooh, I don't want to see that come back into here. It went in, through, closed, and you go, oh, I'm on the wrong side of this now. You close out your trade. So it would have hit 50%. You could have taken a portion off at 62 or closed it out at 62. But anyway, you could see how that trade would have panned out. Had I been watching it, I could have made a good 20 bucks out of that. Does that make sense? So it's easy for me to say in hindsight now what I would have done. But you've seen me trade that over and over and over again for months now. So, and you can see where we've got continuation going. That's why I closed the trade out, because we're already above the level that should support price to go higher. So that's the fib tool technique. It's an excellent way to manage a short run inside a range, even if you're on the wrong side of it and it comes back against you. That fib tool is gospel. I tell you, it's the cat's pajamas. She would say it. Yes, you're right. She would come in. She wouldn't growl. She'd come in and go, honey. She'd be so sweet about it. I like to think she's a monster because she's not. She's so cute. Kind of like Message in a Bottle by the Police. I like that. I just can't. If I sing it, it's going to sound so much like the Police that I'm going to get a copyright hit. So you're absolutely right. It is like a message in a bottle. Yeah. People, can you see the joy of, remember the little kiss? Give me a kiss. Take me to the prom, baby. There you go. That's the kiss we were looking for. And away you go. Got to love it. This is beautiful. Okay, now I'm going to go here. We finally ran up into the level I was looking for up here. Finally, at 2019-15. What's the high close on this candle? No, 20 close. Oh yeah, 915. So there's 894. And the low on this candle, or the close open on this candle, is 23. Oh, I'm locking in profits. I'm going to lock in some profit right here. I took that as a continuation off this low. Now I'm letting that run up now. And I'm going to chase this up just because it's late in the day. I'm chasing each one of these up here, each candle as they close. If it comes back and takes me out, it's a bit of profit. I'll wait for this candle. If it clears that high, then I'll move into the bottom. Ooh, look at that. Came back, took me out. Done and dusted. Okay, that's it for me. I've had fun. Hopefully you guys got to learn lots today. If you like what you see, hit the like button. If you're new to our channel, please feel free to subscribe. Join us on Telegram. We're there in the after hours. We're happy to have a chat with you. There's some great people in there to share their knowledge and skills with you. I am just the front man. There are plenty of guys back in there that are way smarter than I am for trading. Bounce ideas off them. We're in this community to help each other move forward, learn the price action better, and hopefully make us better traders. And I really want to help you guys get to the point where you can trade this with zero stress, like it just becomes fun, because the algorithm's moving the way you want it to. And if it's not, then you stay out of it until it does. And it's okay to sit on the sidelines and recognize those periods where price action isn't moving the way you want it to, not the way Darren wants it to, but the way you want it to. And when it does, then you can get in for these nice little runs and enjoy your quick way to protect your assets and your money. So welcome everybody. Thank you for joining me. And I know you have a lot of people out there that you have to choose from trading live with you. I hope they are able to give you exactly what you're looking for. If it's not with me, I hope you can find it with somebody else that's out there. But until tomorrow, my friends, I will see you bright and early for Friday's TGIF Friday. We're looking, again, my upside objective is in this box here. Put your little box right here like this, mark it on your charts, and wait for it to hit it. We're almost there. All right. So with that, I will see you guys bright and early tomorrow. Take care. All the best. And if I don't see you tomorrow, I'll see you on Monday when the weekend is done. Message in a bottle, yeah.